Good morning. This is Earnings with BloombergQuint. I'm Agam Vakil. We're taking stock of Titan Company and where we've seen its bottom line come ahead of expectations. Of course, we did have indications from the company very recently that there has been a gradual increase in operations. But to take us through the quarter gone by, as well as what we can expect, I'm in conversation with the CFO of the company, Mr. Subramaniam S. Mr. Subramaniam, good morning and thanks for joining in. So my question is how things are looking on ground at this point in time and what we can expect as far as operations go in the next 2 or 3 months.
Okay. To give you the background, obviously after the lockdown, in fact, we shut our stores even before the lockdown was actually announced, with regard to based on our own concerns on safety for customers and employees. So this was sometime in the middle of March. Therefore, we did lose quite a lot of sales during the second half of March. But obviously, April was entirely shut down, and May is when we started opening some of the stores. We are today at about 75% or so of the stores which are open today. There are still areas which are where we are not able to open, like in Maharashtra. Bombay is a place where it's been quite difficult because of the situation out there. The stores are opening up slowly. There are stores which have been now operational for about 4 weeks or so. And the good news is that the recovery rate, as we call it, for many of these stores are fairly decent. In the jewelry division, it's generally averaging about 60 to 70%. Some of the older stores are doing about 80% of what they were before the shutdown. So there is some hope that there is reasonable demand. Having said that, I think one has to be a little cautious at this point in time to see how far this could go. We are not really seeing also signs of a pent-up demand. So it's the demand seems to be sustaining, except that it seems to be more gold-oriented rather than diamond oriented at this point in time. But trends are changing slowly. We are starting to see the ramp up of studded jewelry slowly over a period. And the watches division, it's about 50% roughly, the recovery rate. And that's about the same for the eyewear business as well. I think eyewear more because it's a personal touch. People have to go to the store for optometrist check, etc. There may be a little slowdown there, but we believe this is temporary, and our stores have been well equipped with all safety measures. Our staff have been trained entirely on ensuring that there is no risk to both the customer and to the staff. And therefore, those protocols are very much in place. And we hope that would start giving more comfort to customers as the days go by. And of course, the number of people coming into a store will be limited, but that's perfectly fine.
So I'm sure that your store expansion plans have also been pushed on account of the pandemic. So what's the change in strategy in terms of store expansion? I reckon for now, of course, it's only about opening up your remaining stores, but eventually, do these plans get pushed by 2 quarters or 3 quarters, perhaps a year?
Yeah, I would expect that. Because it really doesn't make sense opening up stores right now, other than those which are already in the pipeline. But I would expect stores to start opening only when we start seeing a sense of normalcy, which is essentially coming back to the levels of sales that we've seen before the COVID impact. And I believe that would be possibly Q3 onwards. So that's when we will start possibly seeing stores being opened.
All right. So also a word on your watches segment. I believe that a significant chunk amount is sold online. And now that a lot more people are purchasing items online, do you think you see an acceleration? Also, if you could give us a percentage of your online sales at this point in time and what you can see or what we can expect going forward.
The contribution of online to the watch division is about 10%, which is actually very encouraging. The only issue is that if you realize non-essentials were not allowed to be sold during the COVID, the lockdown part. So obviously, we could not sell any of our watches at that point as well. It's starting to open up now. And I think customers are starting to get used to buying non-essentials and such online as well. Some of the e-commerce players are still taking some time to ramp it up, but I think it's a question of time, and that would start happening. Yes, I think we would start seeing more of that happen as we grow. But watches by itself will take a little more time than maybe jewelry to start ramping up.
So our final question is in operating margins. We've seen a little more expansion than expected, and of course, to a certain extent, we also had the Ind AS, accounting standard, which is why higher depreciation, higher finance costs led to higher EBITDA. But can you give us an idea about other aspects which are playing out as far as your expansion and margins go?
The margin expansion is due to two reasons. One was the gross margin itself was better in the jewelry division, particularly, and that was led by a better studded ratio. It was led by the fact that yeah, gold prices being high, making charges tend to be higher because it's related to the gold price itself. So those were some of the things where we got some benefits from the gross margin particularly. And of course the denominator itself was low because what got impacted most for us was the last 15 days of sales. The last 15 days of sales would have been predominantly a plain gold sale, which came down to lower margin business as well. So it got affected. Therefore, overall margins looked higher. But of course, there was also the cost aspect. We did clamp down on costs significantly. We had a program which was running for us starting from November, December, and we started implementing it between Feb, March onwards. So some of those cost cuts, etc., started also impacting the margin and therefore favorably actually. And that would be the big focus for this.
Okay, so we leave it at that. Thank you so much for joining us and taking us through the quarter gone by, as well as what we can expect as starting company for you, of course. But there's lots more lined up. Stay tuned to BloombergQuint, and we'll keep bringing you more.
Thank you.